Right, good afternoon, everyone. It's exactly 12 o'clock, and I'd like to welcome you to this live and essential webinar proudly brought to you by a real estate investor in partnership with the 2025 Reside Conference and Awards. The noonday gun is just fired here in Cape Town, where we're broadcasting from. I'm Neil Peterson, your host for today, and it's fantastic to see such a strong turnout from across the property industry, investors, developers, financiers, agents, and a multiple of various property professionals. Thank you for joining us. For those unfamiliar, REI has been the trusted voice for South Africa's real estate investors and industry and professionals since 2007. Our mission is simple: to inform, connect, and empower our audience with practical insights, expert commentary, and the tools to build long-term success in real estate. And we do this through our flagship Real Estate Investor magazine, online platform REI, our video interviews, newsletters, live webinars, and of course our joint anchor industry event, the annual Reside Conference and Awards, amongst other live events and seminars. So a little bit about Reside Summit. This year is the third annual Reside Conference and Awards, and it takes place on the 9th and 10th of July at Sandton Convention Center. And I'm going to ask Debbie Tag, she's the chairperson of the awards, to give us a little bit more insight as to what we can expect at those conference and awards. Over to you, Debbie.
Thank you, Neil. The fact that we're doing these webinars now, I don't know if it's a good or bad thing, because it means it's around the corner. So I've really enjoyed the fact that we've started doing this to create excitement. I think those that have logged on, you're going to get great insight and content from this expert panel, of which are also representing speakers at the event in just under a month. That scares me when I say that. And yes, you say it's the third annual. It feels a bit like the fifth based on just the growth. Reside Summit continues to endeavor to represent the entire value chain within residential development, from social housing, affordable, to student, to retirement. And this year is no exception, including, I think, what we're pretty excited about is that we've got the exhibition, of course, but it's the first time that now the show will also open to the public. So anyone that is involved in property development, investment, whether you're an individual right up to very senior executives like we've got here on our panel, they will all be there, and there's something for everybody. And I would be amiss not to talk to the awards, because it's Neil's fault. I think 3.5 years ago when we were coming together to put Reside together, and he said, we really need an awards, and, sucker for punishment, said yes, but they've been phenomenal. I cannot believe it's only the second annual. We've doubled in entries just in 1 year. We had an amazing judging session with 20 of the judges, and we're really looking forward to basically oversubscribing for the actual gala dinner as well. So even if you haven't entered, you're more than welcome to consider. I know it's a big networking opportunity, and I know that specifically in this business, it is about networking and engaging. So we've made sure that there's lots of time through the 2 days where it's not just about content and learning, but finding opportunity to meet up with our industry peers. So yeah, if you haven't gone on yet, I know it says Reside Conference behind me, but it is residesummit.coza. And I'm not lying, everybody who's there, the who's who, like our panel to the left of me, will be there. So, if you've got any objectives, any plans that you're doing within the space, you need to be there. We'll all be coming together 9th and 10th of July.
Really excited. Thank you, Debbie. That's awesome. Really excited to once again, 9th and 10th of July, Reside Conference at Sierra. Thank you, Debbie. Wonderful having you on board. So just for our audience, again, just a little bit of housekeeping. This webinar will be recorded, and so you will receive a link to the full replay. And questions are welcome. Put it in the Q&A box. So I just want to talk about our topic today. We know that South Africa's residential property market is a critical inflection point. And I think from economic headwinds and affordability concerns to political uncertainty and crumbling infrastructure in key metros, challenges are real. So yet at the same time, there is pockets of immense opportunity, and they're emerging. And with the right leadership, strategy, and insight, the market can pivot, and I'm sure all these gentlemen would agree, very fast. And of course, our goal today is to explore how to balance growth, manage risk, and build sustainable value in this changing environment. So I'm honored to be joined by the three highly respected voices in this industry. First, starting with Rob Vesela. He's Managing Director of International Housing Solutions with over 14 years of experience in affordable housing across South Africa and sub-Saharan Africa. Rob, would you like to briefly introduce yourself to the audience?
Thanks, Neil. Like Neil said, I'm Managing Director of International Housing Solutions and have been for the past 15 years. We develop and invest in affordable housing for sale and for rental in South Africa, Namibia, Botswana, and most recently, Kenya. We do a lot of sales and a lot of rentals.
Wonderful. Great having you on board, Rob. Gareth Alston is the Managing Director of Golden Section Capital. It's an investment specialist in both listed and unlisted real estate, infrastructure, and real assets across global markets. Gareth, please say hello to the audience as well.
Thanks very much, Neil. Great to be here. And, as you mentioned, we primarily focus on the listed space, doing some unlisted work as well across the listed property and REIT sectors, and looking at all the sectors across that, which if you want to really cut them into the smallest bits, you can get close to about 30 sectors and subsectors. And obviously of those, residential is one of the most important globally. Probably not many markets facing as many challenges as South Africa, but certainly a fascinating part, and hopefully I can add some value to the audience today.
Absolutely. Great having you, Gareth. I'm sure you will. Paul Jackson is the CEO and co-founder of Tough. It's one of South Africa's most impactful leaders in development, finance, and inner city housing. Paul, great to have you. Please share a brief intro with us.
Thanks, Neil. Tough is a very specialized commercial property financing company aimed at affordable rental housing. So we fund property entrepreneurs with a housing outcome. We've been around for about 22 years, have branches throughout the country, and focus in on both suburban areas, inner cities and suburbs, as well as townships through our Umastandi program.
Wonderful. Great having you, Paul, and welcome to you all, gentlemen. It's a pleasure to have you all here, and I really look forward to a rich and engaging discussion. So, Rob, let's start off with you on this one. Let's look at the current market landscape. How would you describe the current state of South Africa's affordable housing market from an investor's perspective right now?
Thanks, Neil. I think you covered some of the challenges that the industry faces at the moment, but all in all, I think we're in a particularly exciting point in the residential market at the moment, particularly, where we play in the affordable residential space. I think, as Gareth mentioned, this is a massive part of the real estate property market everywhere in the world and has significant exposure into the residential space, and particularly the multifamily rental space, as they call it. South Africa has always been pretty underweight in that space. I think companies like ourselves and Tough and many others now have started to play in the space at scale, and the institutionalization of that market is starting to take place, and I think that is a very exciting thing in South Africa. There was a very negative slant towards the affordable residential market for a very long time, but I think we're witnessing the change happening right now. You're starting to see institutional investors in South Africa coming into the space and wanting to invest in something that essentially can look like a very high impact bond, very certain cash flows, and very, very impactful. And if any of you saw the stats that came out yesterday from PropNet, I think it was, the rental market in particular is performing very well. Our buildings are full. We're getting good increases. Sales, obviously, we're in a high interest rate environment at the moment, coming down slowly and starting to improve, but I think there's a lot of upside there as well. So I think we're in an exciting place. We'll talk a little bit later to some of the challenges, but I think from my point of view, I think we're in a very exciting space.
Excellent. Great. Thanks for that, Rob. I think it's PayProp you're referring to a rental stat. PayProp. Yeah. No. Just correcting in terms of the right source. So, Gareth, you mentioned you're in the listed space. From your macro and listed property lens, what are the trends that are shaping the performance, particularly of the residential market in 2025?
So, if we look at it globally, we're starting to see a lot more positivity coming through. After last year and the year before, there was a pretty big supply overhang, especially in the States. And that was really pushing down performance of the listed property, the residential listed property space within the US. And the US is quite fascinating because they don't just have apartment blocks. They have multifamily, they have single houses, they have basically you have many type housing that you have available. You have basically, if you understand the old sort of view of the Plettenberg type cabin type housing, that manufactured housing is also a very big part of the sector there, and they have now started to recover and do pretty well over the last 6 months, which has been good to see. Locally, it's been a different story, and it's the local listed space, especially on the residential side, has suffered for a long time. There've been a lot of players within it who've tried to launch dedicated players, and we had a few that existed for a good while, such as Inlu Place and Transcend, that were listed and focused purely on resi. They really struggled to gain traction locally, and we no longer have those. They've both been absorbed within mergers into SA Corporate and Emira, respectively. We still have some players, especially if you look at that Optidec, for example, which does a lot of work within the Pretoria CBD. So there is a focus on it from certain REITs, but it's small, and it really hasn't gotten the traction, I think, which we would have expected in a market that has such a high demand that South Africa has. And it's been quite disappointing, I think, for a market watcher who would like to see it really helping to drive a solution to the problems that we have in terms of housing, that it just really hasn't received much love from the general investing market. But in terms of non-listed entities, there's been a lot more positivity on it, and that has certainly helped and carried on to drive. But in terms of the listed space locally, it's just really been fits and starts, and it's really not getting to where I would say the market actually needs it to be to address the negatives within our society.
Okay, interesting. I think good analysis there. And we hope that we can start seeing some change and improvements in that direction. So Paul, what is Tough seeing on the ground in terms of demand for inner city and affordable rental housing? I mean, you're right deep into that space.
Firstly, I want to echo both Rob and Gareth's sentiments. There is, for the first time in a while, some cause for optimism. And the second thing is that what's on the ground is a curate's egg. We're seeing different dynamics in our Cape Town branch and our East London branch, say, to our Johannesburg branch. And so we are seeing for the first time rentals starting to tick up. But we have a strong affordability ceiling. When somebody rents an apartment, it is they have a certain amount of money that they can spend on their accommodation, and unfortunately, government's share of that rent increases all the time. So it is placing some pressure on margins at project level, at property level. But with the right strategies, you can get around these things. And then with the right engagement, we can get around these things. But overall, eventually affordable rental housing is being seen as an asset class. It's been seen as a broadly investable asset class. When we securitize our assets, in other words, take them to market, we have very diverse and very strong demand for the notes, simply because they performed so well during COVID. We had a small dip in the hard lockdown and recovered very quickly. None of our covenants were triggered. There was no breaches. We got through COVID almost, very, very, very well. So
good.
So there's lots of institutional demand for the notes that we put in place. But on the ground, demand remains stable, particularly in inner cities like Joburg. It's not quite where it used to be, but vacancies are coming down very nicely. In the suburbs, we're starting to see very strong demand. And then the last point I'd make is that the rental differential, say, between the inner city of Joburg and the suburbs is now it's almost at parity. And consequently, people are choosing to live more in a suburban kind of setting than in an inner city setting.
Okay, thanks for sharing that. Very interesting. And let's unpack a little bit more the affordability demand we've touched on a little bit. So, Rob, over to you. I mean, are developers struggling to balance rising construction costs with the need for affordable housing? And how are you managing this at IHS?
Yeah, Neil, I mean, it's a real problem, and it has been for a while. Our struggle is always to make our product as affordable as possible, because that is where the demand is. The lower you go down the LSM chain, the more demand there is. South Africa, you have a thing where there's, a whole lot of need, but only so much affordability. So there's no doubt that the increasing construction prices and the like are having a real impact on making it tough to make the projects work. Probably the most expensive unbudgeted cost in just about every project that we do, and I would hazard a guess that that's the same with everyone else on the panel and in the audience, is the time that's lost through lack of local government capacity. So, if I could put a number to the amount of money that we've lost over the last 15 years by waiting 12 months or 18 months for plans to be signed up, or not having a sewer where there's supposed to be a sewer, not having electricity. That is a very big cost to our projects, and it's a problem going forward. It's one that has to be resolved. Obviously, in some jurisdictions, it's worse than in others, but it's something that any investor or developer has to be very, very careful of, to make sure that that's taken into account. So we haven't found the silver bullet as far as alternative building technology is to bring pricing down. In 1995, the discussions were pretty much the same as they are in 2025 as far as that product is concerned. I think we don't have the scale, and we got to try and make it at this stage work with brick and mortar until we find a viable alternative. But it's tough. It's not easy, and we have to find particularly land that is shovel ready, because we don't have the time. The margins are too thin to wait for 24 months to be able to start building, because then the project is not viable. So we've found that we've had to move to areas and locations and even local authorities where services are available, and the site is shovel ready, because we don't have the time in the viability of the project to wait for things like plans being signed off and infrastructure to arrive. That's a big problem.
Well, we hope that Helen Zille could be that new silver bullet in Johannesburg as mayor. And we'll see how that sort of pans out going forward. But certainly Johannesburg, it certainly needs a lot more support from municipalities. And I don't know if you want to comment on that briefly.
Yeah, no, I mean, there's no doubt. We don't even need people to do their jobs well. We just need them to do their jobs, and it's really a big problem, and you need someone to answer the phone and someone to look at the drawings that you send in, and it can't take months and years,
Exactly.
It's a killer for our business. It just can't work that way. And like I said, some local authorities are better than others, but that is a very real problem in our industry at the moment.
Absolutely. And it's very interesting, Rob, at your conference last year, you had the Mayor of Johannesburg, and he promised a whole lot of things. He's failed on delivery, and he was actually held to account.
Unfortunately, it hasn't happened, yeah.
Hasn't happened. Gareth, over to you. So what does the data say about South Africa's consumer affordability thresholds and how this is affecting investor strategy?
Well, consumers are definitely under a lot of pressure, and that's across all the listed property sectors. It's the only ones that are actually performing relatively well are your convenience type shopping facilities, because they deal with daily necessities, and that's where people have been stuck in a rut really for probably the last 5 years, obviously as a result of the pandemic and just the issues that have carried on going through. So those performed well in 2020 and they've carried on performing well to date. We're seeing slight green shoots in office, but it's taking an extremely long time. There's still a lot of oversupply. In terms of residential, it's the same. As some of the previous panelists mentioned, there is an affordability level, and it is quite low. So that's often where you have your listed investors. They don't get that excited by residential because it's very difficult to get growth. So your costs, they go up quite nicely. Your municipal costs just never seem to cease. That's if they were doing their job again, as Rob was saying, that would be fine. You don't mind paying. But the thing is, you have the double, triple whammy of they not doing their jobs. The rates keep going up and the services get lower and lower. So your developers and your property operators are having to spend their own money on providing basic facilities. And it is incredibly frustrating, and it really impacts that bottom line. And it then impacts the tenants, and it impacts the shoppers, and the renters and your office renters. Everything just is pretty difficult to make money in South Africa. There are very few of the property sectors. Even industrial lately has started to struggle a little bit. They're hitting the levels as well. So it's not a great environment in terms of getting massive growth coming out. So everyone's been trying really hard. We've seen a lot of the capital that should have and could have been spent in South Africa has gone offshore. So that's where the growth is. And when that's being spent outside of our markets, obviously we're not going to grow. But capital will always find the home that welcomes it. And despite the government knowing and local government knowing what they need to do and what needs to happen, is they're not making capital welcome here, or making it easy to be expedient on the usage of that capital. So it then finds another home where it is welcomed. So that's the problem. We're seeing green shoots, but we need growth, and we're not seeing growth yet. So we've had the halcyon days of the GNU at the start, but that's hit rocky patches, and hopefully it continues to keep going. But in terms of real growth, it's still pretty low numbers. And when we're looking at putting it against the real inflation numbers, we're lucky to be standing still in many sectors, unfortunately.
Well, yeah. So, we've seen that policy from government. They've been doubling down on their policies, which is very not investor friendly at all. But Paul, maybe, you long championed on a small scale, the small scale landlords themselves. How are they adapting to affordability challenges? In today, is it much of the same?
Well, I think one way of thinking it through is that we spend quite a lot of time talking about what the demand side is, how affordability is a central issue in the demand. But I think we can say with some certainty that the overwhelming desire for people is to move from the periphery towards the cities, in well-located townships, those kind of areas. So there is that demand. So what are the dynamics of the supply side? That's your question. How are our landlords affecting or thinking about supply? Now, if you go back to Economics 101, your rent less your operating costs is your margin or your net income at project level. And is there enough to service capital? And there are two forms of capital, equity capital and debt capital. And this equation is for our small landlords as it is for Rob in IHS. So the strategies are really about threefold. The first is to be very careful about product, making sure you've got smart product, you've got well-finished product, the high quality product, and then you're going to get the demand. And with that goes the whole sort of property management, making sure you've got excellent property management. The second is, how do you avoid council? Tough, strange enough, is funding boreholes downtown Hillbrow at a rate that I never expected to see. So people are looking to avoid council, introducing energy efficient systems, etc., etc. So you're trying to avoid council. And I'll answer a question a little bit later. The last that everybody is doing back to the equation of rent less property income, whatever's over is to try and make your capital equation work. And that's upward rating. So what our clients are doing, and you're seeing it across the industry, supplying smaller and smaller units at higher and higher levels up the affordability chain. And that's only so because your council charge is running at about 1,500 Rand per unit per month. Doesn't matter where you are, it doesn't matter the size of the unit, it's more or less that. And so if you can construct that little bit more cheaply, and say your rent is 7,000 Rand, and then you've got 5.5 left over to be able to balance the equation between your capital needs and the construction cost. So you got this concept of upward rating. We are getting to a stage where the old 50 square meter 2-bed, it's impossible to build it unless you've got the rentals. And that's the interesting distinction, say, between the Cape Town market, where rents are about 2,000 Rand a month higher for exactly the same thing. You can afford to do new build, whereas in Johannesburg, it's much, much more difficult. And hence you're seeing that people are doing a lot of office to residential conversions, doing this upward rating that I've just described. But if you do those three things, you can see out this cycle. Can you look through the cycle? We're at the bottom, hopefully starting to look up. Gareth's point of green shoots. What does the look through the cycle mean? But the look through the cycle in the Johannesburg situation is we need a very, very dramatic change in the way that local government functions, in the way that they tax us, in the way that they charge us generally. And without that, it's quite hard to see the other side, I think.
Sounds like we need, there's a cry out for change here, and we can talk a little bit about it as we move on into the webinar. Rob, just from an investment strategy perspective, I mean, how has IHS adapted its investment criteria or your project pipeline in response to changing interest rate and inflation dynamics, which we seem to be tackling with at the moment?
Well, it's quite interesting, actually, Neil. The case study for IHS was done looking at the residential property market in South Africa between 2000 and 2007. So those of us that are old enough to remember those glory days, to Paul's point and to Gareth's point, there was real GDP growth in South Africa, and property prices around the country would increase by 20 to 30%, residential property. And actually not only residential property, it was also the early REIT days where yields dropped from 15% down to 8%, so those were the glory days. And that the case for IHS was actually in South Africa was built on those returns. And we sort of kicked off IHS as the global financial crisis started. And that's really where everything started to change. And we really didn't have any growth of any scale after that. And when IHS was initially established, the idea was to do for sale projects. There was no real thinking about doing rental projects and creating an institutional rental market. Suddenly the global financial crisis happened and we couldn't sell anything. So we said, okay, what do we do if we can't sell? Because people aren't buying homes, there's actually a really good rental market. Let's start focusing on that. And it means you have to focus in areas where people want to rent. And to Paul's point, you have to make sure you have an extremely good residential property management business because it's unique. It's not like commercial property management. It's hard. It's human capital intensive. And it's immediate. If someone's toilet breaks in their office, they go home. Your toilet breaks in your apartment where you rent, you want it fixed straight away. So we pivoted at that point, and started doing some rentals and very few sales as the economy recovered from the GFC. The sales market started happening again, and interest rates eventually went down and sales were good. And rental is pretty consistent. It's better in a high interest rate environment, but it's still there in a low interest rate environment for different reasons. But I think what you have to do is you have to Paul's point about Johannesburg, we see many projects in Johannesburg that we just can't do because of the administered costs and the impact that has on the returns that we get. So what do we do as investors? We go elsewhere. Cape Town is a particularly well-managed city. It's easier to make a transaction work there than it is in Johannesburg, and that's just an unfortunate fact because there's so much need here.
Absolutely.
We have a inner city with massive infrastructure in place. There's hijacked buildings. I think in about 1997, there was a program launched called the Bad Buildings Program, where they were all going to get emptied out. The private sector was going to get involved, and we're going to turn them into, good, affordable housing product where people could live. Obviously, that situation has just got worse and worse and worse. There's still a bad buildings program. There's just many, many more bad buildings. And that's an opportunity. We have all of that infrastructure sitting there, which could be utilized, if it could just be managed. I think that is a real opportunity, and it's an area where the private sector can really, really get involved. We know how to do it. There's a handful of companies, maybe significantly more than a handful, that could really step in, use their own capital, and turn the city into a flourishing city. But we need help from the governments, and that's very important. So we pivot.
Absolutely.
We pivot. At the moment, we're still in a really good rental space, so we do a lot of rental projects in a geography like Kenya, where there's good capital growth. You're seeing capital projects that get a 10 to 15% per annum increase in their capital value. That's a different market. So in South Africa at the moment, a lot of rental, but still some sales. To Paul's point about conversions, we're doing some very nice conversions of office buildings and office parks in Johannesburg. But we're fortunate. We're in a position where we do sales. We have a good sales team. We do rentals. We have a very good property management business, so we can manage those rentals. So I think that's how we handle it.
Perfect. And pivot it is, and we will talk a little bit more about that infrastructure and policy going forward. And Garrett, coming back to you, I mean, you actually described the market so eloquently earlier on, both listed, international, etc., and obviously, demand being low. Are we seeing a shift in investor sentiment towards more defensive real estate asset classes? I mean, and then where does residential sit if you compare the other categories?
Yeah, look, I think there's within the listed space, there are always going to be investors who are looking for the slightly higher and riskier investments, and those who are looking for this kind of almost a bond type return, which is slow and steady, and you know what's going. But in terms of residential in South Africa, there are very few. As I said, there are no direct options anymore. They've all been. They just didn't perform, and they ended up being taken out, even though they were actually performing quite well. And if you go back to how those started off, literally the conversion of office things goes back over 20 years, back to a company called Angus, if you can remember that far back, who were converting downtown office buildings, and they were invested in by Apex High and Redefine. And then you started to see this happening with more in place than listed, and also had a focus on doing that. You've seen it happen with Octodec is doing a lot of work on this in the Pretorius CBD. But yeah, it's just there isn't really direct optionality anymore. And also what we've seen is that even with the listed companies who have bought out some of the residential portfolios, if they actually worked quite hard on selling those off. If we look at, for example, Transcend was taken into Emira, and they've sold a lot of those off. The plus is that they have been able to sell them off, and they've actually been able to sell them off at reasonably good returns as well. So the demand is there, especially on the private investor side and the non-listed space, which is good. But on the listed side, there's just very little appetite. So, if you have investors who want to get exposure to multifamily type developments without doing it themselves, they have to go through a REIT that has part of that in its portfolio, whether that'll be Octodec or SA Corporate, but they can't really get a pure play anymore as such. So they then either have to do it themselves or get to a point where they can be involved with syndicates that can eventually become property companies developing these own. But that obviously, again, is difficult because you need capital. So it's quite difficult for people to do it in a South African sense. In an international sense, it's completely different. There are, in the US alone, there are almost 20 companies that you can find that'll just be dealing with various sectors within the listed residential side. But South Africa, it's become very difficult to get access.
We're going to have to get into that policy and infrastructure discussion, which is coming. I think it's so important from a PPP perspective and how we can sort of really get momentum into the residential sector. But thanks for that, Gareth. Paul, Tough works with many first-time property entrepreneurs, buying buildings, etc., in a city and all that. How should they think about building resilience into their portfolio strategy?
Well, Neil, let me start by saying that the first timers, the rookies that we call them, are the gold of our sector. We've got not enough entrance into the property development space. We're recycling more and more of the same old people. And this is where our township program's so exciting. The entrepreneurial flair that we're finding in townships and in the suburbs around the CBD, in all the areas we work in, is really, really good. This idea that the ordinary person, there's a lot of entrepreneurial ability out there. But for first timers to build resilience, the first thing is they need to get knowledge. They need to participate. Tough has the Tough program for property entrepreneurs, a bit like the SAPOA property development program. It's available to UCT accredited. We have a very strong mentorship program. Nothing better than finding somebody who's walked the same journey that you are about to walk, from the same background, with the same fears, the same issues, talking to them. And then getting the training done, and making sure you're talking to people, you're visiting other projects. The second is mix your sources of income. Sometimes it will be just a pure residential play, but if you have an option to have some ground floor retail, to have some sort of different, a creche, whatever it is, you should really look at mixing your income, because mixed income projects are just by their nature less risky. And then the last in resilience is think about prop tech. Now, when people think about prop tech, they think, AI and data and all this. No, just make sure that you're doing the basics. You've probably, first timers need to buy a project that they can handle. Sometimes I'll get a first timer walk into Tough and say, no, they want to buy a 60 or 80 unit block of flats. And we say, no. Let's start with a 4-unit block of flats or a 10-unit block of flats. So there must be a very strong correlation between where you are in the game and where you need to be. But use prop tech, use access control, use smart metering, use things that you can see what your tenants are using. Have a WhatsApp group is simple, but then you can upgrade it. There are lots of really cool prop tech things out there that you can buy for as little as 35 Rand per unit per month. And do wonderful things that can assist you in providing service to your clients. And I want to finish there is that, I want to go back to Rob's comment and a comment I made is residential real estate needs a certain competence because it is interpersonal relationship heavy. And if you can use an app to improve that, but most important is that customer service in our sector is much more important than it is. It's important in all property sectors, but it has that intensity in our sector. So remember that customer service and credit control are two sides of the same coin. If you've got excellent customer service, you are likely to get really good payment levels and cooperation from your tenants.
Wonderful. I think that's some great insight there, Paul. Thank you very much for that. And now we're going to move on a little bit to policy and issue. And I don't want to divert the conversation completely into this sort of direction, but Rob, starting with you, and we alluded to it, we've all alluded to it, what role should government and private sector partnerships play in unlocking new residential development zones?
So, I mean, that's, PPPs are spoken about so often, Neil. And actually, there's some very good examples of really successful public-private partnerships. In around about 2012, 2013, we did a seriously big development in Soweto called Flareoff in partnership with Calgro. We developed north of 10,000 units, every kind of units. BNG units, social housing, affordable, freestanding, affordable sectional title. It was a fantastic development. We had massive participation from local government and provincial government. We got services, infrastructure, subsidies. It was a colossal joint effort by government and the private sector. Delivered thousands of houses in a short space of time. We did exceptionally well economically out of it, as did everybody else involved, and it's a gem. Go back to 1997. I was actually at Group 5 at the time. We built the All Africa Games Village. Instead of putting athletes up in hotels, we said, let's work together with the Department of Housing, the All Africa Games Committee, get all that money that was going to pay for hotels, get money from the private sector and build a village, which we did. Everybody worked together, worked famously. All of those houses sit on the eastern side of Alexandra, and they stand out as different and better. We planted a tree at every house. So it is possible. Just unfortunately, in recent years, it's become much, much harder to get that right. The private sector doesn't want anything for free. But if we could access affordable land on condition that we build green, that we build affordable, the SHRA program, as much as people may complain about it, we also are working in the social housing space. It's a very effective program. You get a significant capital subsidy to build social housing units for rental, and it's viable from a private sector point of view because of the capital subsidy. And you going right down the LSM level, they're servicing people. They're sometimes paying less than R1,000 a month for a very nice apartment stroke townhouse. It's a really hits a thread. So it is possible, but we need interaction. We need people to talk to us and work with us. The private sector generally is available. I know through JPOMA, through SAMRO, through various other bodies, there are conversations that go on all the time, but I just don't think they're taken seriously enough. If there's so much good land in good areas, to Paul's point, in Bryanston, I can guarantee there will be government land where we could build affordable housing units where people would be close to where they work. And it just gets tied up in too much red tape. And I think that's the problem, but the private sector is available. And there are examples where it's worked really well. We just need government to talk to us. And in some areas it happens. And in some areas it unfortunately it doesn't happen. It just gets tied up in a colossal heap of red tape.
Yeah. Very sad to see. I mean, I've just, last week was the Western Cape Property Development Forum, and it's a different picture in the Western Cape. I mean, we have the Premier that attends, we have, the Mayor, Jordan Neal-Lewis. It's a different conversation, and it's not easy, but it's working a lot better in the Western Cape, and you alluded to that earlier on, and we'd just like to see the same happening in Johannesburg. I think it is so important. So it's a cry out there to our municipalities and everybody, it's talk to us, talk to the industry, talk to us. So Gareth, you alluded to that a little bit earlier on, just in terms of, you're not seeing much movement, et cetera, and policy shifts, et cetera, and incentives. What can be done to accelerate housing delivery or finance? I'll rather, turn the question the other way around. What can be done?
Well, I think a lot of it is literally government getting out the way at times. It's bad enough that you can't get things delivered, but it's that things just take so long to get done as well. I mean, if you try and go to building control or the Joburg Council, they don't even have their own functioning building anymore. So that sums up the kind of mess it's in, and it just this type of delay and problem, it just has a ripple effect through a whole economy, because you have developers sitting on the sidelines who want to do a lot of work, but they just can't, because they can't get plans passed, they can't get zoning sorted out. They have, we, for example, I know I'm involved with a business where we're trying to develop an extension onto a shopping center, but we need to get air rights, and we've told it'll take 3 years to get air rights. I mean, it changes the dynamics of the type of project that you want to do, where you just say, well, I'm just not going to do it, or I'm going to do something different. And that stops you hiring contractors. It stops jobs being provided for people on the construction side, in the facilities afterwards. And it just becomes an issue where it would be, if government could just get out the way a little bit and facilitate, it would make things so much easier. We'd love them to come to party, I think, and bring money and partnership, but I don't see it happening too much. So it's more if they could actually just enable the private sector to get things done, things could happen a lot quicker and a lot more efficiently and cheaper. And that then changes the project dynamics and the financials on these to make them feasible. Where at the moment, there are many things that are just feasible. And when you add in a country risk premium, it becomes rather don't. Either just leave it and go look somewhere else. And you look at that at IHS, it's great they're doing things in Kenya, but it would be better if they were doing it here. But it doesn't make sense for them to do it here, because it's just, there's a point beyond which it would be irresponsible of them to do more work here, because it just doesn't make sense. So we have a lot of problems where we have government shooting industry in the foot as well, and it just doesn't help. We need assistance, or just, as I say, just step aside and let work actually commence, and things would happen a lot quicker. And then we'll start to see a bit more growth coming through. Because at the moment, it's just speed bump after speed bump.
Yeah, nicely put. I think, thank you for that, Gareth. And hopefully, there's a voice out there, or there's an ear out there listening, and hopefully they can start implementing. Paul, how is infrastructure and municipal services impacting the viability of inner city and township residential developments?
So I was also at the Western Cape Property Development Conference, and
you were a speaker.
Yeah, I made 3 points, and let me remake them. If you can access the capital markets, which we increasingly can do, to build affordable housing, then the source of finance is theoretically limitless. We have very, very deep capital markets here. So that's the first point. The second point is you've got this concept of institutional lockout, which is, I think, what we've been talking about, is that, we're a financial services company, a bank. We have to tick boxes. So if we don't have plan approval, or we don't have zoning, etc., we can't fund. We're technically locked out. And I think the third is that we need efficient municipal services. So Tough has 2 areas where the metro is business friendly. The one is Cape Town. The other one's, strangely enough, East London. One's an ANC government, one's a DA government. But the point is they are common in that they are business friendly. They have very strong relationships with the Border Kai, and then with all the Greater Tygerberg, etc., in the 2 different areas. And this makes all the difference, because you are getting more responsive government there. Take Yeoville, for example. I was just looking at our stats, because we have quite a big exposure in Yeoville. There are lots of medium-sized buildings, great places for first-timers to start. 30% of our book is in default in Yeoville. Why? Prolonged periods of no electricity, prolonged periods of no water, and absolutely no bylaw enforcement. So it's a kind of mess. And that's a real worry for a financier. We've got to really look at these. So municipal services We've studied Joburg audited financial statements since 2010, and the picture's not pretty. Since 2010, inflation has gone up by 100%, if you take inflation. Wages have gone up by 96%. Municipal services have gone up over 400%.
Wow.
So you've got that real problem, and then you've got a situation in some of, and by the way, those municipal services have gone up just as much in Cape Town as they have in Joburg. So there's no difference there. But the question is, are you getting value for your municipal buck? In the Joburg situation, and I want to conclude on this, is that we are currently, as Joburg, spending more money on politically motivated non-payment, like Soweto doesn't pay for services, and if they don't pay, somebody else has to pay, than we are on infrastructure. So our bad debt write-offs, there's some indigence in there, so let me put that caveat in. Bad debt write-offs exceed investment in infrastructure. Back to the institutional lockout, you can't, or the thing that's happening in Yeovil, people are not prepared to rezone because they're worried about the grid failing, the grid being the water, the electricity, the sewage, refuse collection. So we woefully underinvesting in infrastructure in built-up areas, and we're taking all the little bit of infrastructure we're investing in, putting it on the periphery. And this is a real problem. So it's not pretty currently. And therefore you have to look at solutions that put you outside of municipal control. That's why these bigger developments, those kind of things. But it's very, very hard for the first timers. It's very hard for the small investors in the townships, et cetera, who are doing wonderful, wonderful things. Let me not lie. In city, but also in townships, it's remarkable what people are doing. It's a massive potential that if the brakes were taken off, would be able to yield hundreds of thousands of units per annum.
Well, so I'm just conscious of time here. Thank you for that, Paul. I think you articulated that so well. And it also pertains to a lot of the questions. And we've got quite a few questions. I want to thank our attendees for putting and posting those questions. Some of them we've already covered in some of the discussions. There's one which I would like to ask you, Paul, which I think is quite interesting. What innovative models are you seeing globally? And it's actually to all our panelists, that South Africa can adapt to solve the affordability crisis while still achieving scalability. Are there examples? Are there ones that we could use? Paul, maybe I'll ask you, Gareth, you're welcome, and Rob, to certainly put forward.
Well, let me start the answer by saying affordability is a worldwide problem. And the quickest way to solve affordability is to create an economy that's inclusive, that increases incomes. There are other innovations around the world related to how does government in a way that supports people to meet certain affordability targets as they move up the economic ladder. But there's no silver bullet. I think the international experience shows you there's no silver bullet. There's no one government who's doing something that we could import, and at least not in my experience. Where you've got highly successful housing delivery, like Singapore, like some of the Latin American countries, et cetera, is really been about how government has brought capital, private sector capital and the private sector into play, how that they've supported a good diversity of funding options, from personal loans through to affordable home loan type things, through to the things like we've got FLISP, the first time buyers stuff, through to SRA, and making those highly effective is the way. But the idea that there's a silver bullet, I mean, I've looked for it for a long time. And it's just my experience. I don't think there is one. It's really about bringing players too, so that particularly first-time property entrepreneurs, what's their biggest problem? Access to finance, so that they have an access, they have choice to come up with a financial solution that fits their objective.
Wonderful. I think just here, great. I think great advice and insight there. Rob, did you want to add to that? You're looking for that silver bullet as well, eh?
There isn't one, unfortunately. Paul and I have been scratching in the same patches for a very long time. There's no silver bullet. Another market where they've developed a lot of quality affordable housing is Vietnam. And what some of these other economies have that we don't have is the scale. Because alternative building technology can come into play and be efficient if you can build 5 and 10,000 units at a time. We have the demand for that, but we don't have the affordability. So you get back to growth. We need economic growth and people to be in jobs. An area where there's been a lot of progress, and Paul touched on it a lot, from a property management point of view, particularly with larger projects. COVID was actually our silver bullet here, because we had no choice but to systemize everything. Leases couldn't be signed in person. Inspections couldn't take place in person. Everything had to be systemized and automated. And I think that drove development in the property management space very, very nicely. And we've actually found, notwithstanding these increases in administered costs, we've been able to carry on building. And I just want to correct Gareth, RHS still does a lot of it. We do more in South Africa than we do anywhere else. And we've got a lot of sites underway at the moment and a lot coming. It's just harder. You have to solve the problem. One of the ways we solve that problem is by making our property management more efficient. And thereby still, when we started doing residential property management, our op costs sat at 30, sometimes 35%. As we've got better at it and it's become more systemized, notwithstanding the increased administered costs, we've actually managed to bring it down quite significantly. So, closer to 22 to 25% these days. So you have to do what you can to make the project work, but no silver bullets.
Okay, great. Gareth, I'll bring you in now. So I know Paul is really pushed for time. So what I'm going to do is, and I will give you all an opportunity to wrap up. For those of you, this conversation continues at the Reside Conference and Awards on the 9th and 10th of July in Johannesburg at the Sandton Convention Centre. And so please come along, please register. We'll see you there. Paul, just give us your quick fire final shots, in terms of your wrap up, leaving people with thoughts. You've really given some fantastic insights here today. And so maybe, and I know you pushed, your meeting literally starts in a minute or two. So if you could just give us your final thoughts, then I'll give the rest of the team the opportunity thereafter.
Thanks, Neil.
You first.
My final thought is more a plea. And the plea is, let's focus on the first timers. Let's focus on bringing new entrance into the property market. And that focus requires thoughts around how do we give access? How do we give support, a broad access, whether you're in a township in Khayelitsha or Delft or in Soweto or any of the areas. How do we improve that concept, the access? Because there's a massive entrepreneurial talent waiting there. I've been blown away by ordinary people doing extraordinary things. And if we can just make sure that is part of it, because it's, and then the second last plea is that let's focus on building accommodation, not on the periphery, but in the center, in the Sowetos, in the Randburgs, in the Bryanstons, in the Edenvales, in the Delfts, in the, wherever you are, bring people closer, because urban sprawl is a crisis that's going to have intergenerational consequences. But with that, thank you very much, Neil.
No, thank you very much. That's Paul Jackson. He's the founder and CEO of Tough. Your excuse, Paul. Thank you very much for your input. Cheers. And Gareth, so I'd like you to give us your final thoughts, your wrap, and maybe just pulling everything together and leaving the audience sort of with a way forward. And we'll continue this discussion at the awards and at conference of Reside. Over to you, Gareth.
Sure, thanks. I think we've gone through a lot of challenges and problems and headaches today, but I think there's definitely there are lots of interesting things that are coming through. There's lots of technology that's changing when it comes to prop tech, when it comes to management of properties that become more efficient at lower costs. And there are also some interesting things happening, on the construction side as well. We're starting to see a lot more modular construction becoming more commonplace and used. Manufactured housing, I think, is something that's definitely been way underutilized within South Africa. And on the high-tech side, we're starting to see a maturing of a 3D printing process when it comes to housing as well in the States, where it's actually potentially offering a much lower cost option as we start going forward. And as it starts, scale again becomes the issue, but there are technology things that are going to start to potentially change the dynamics and economics. And I think that's an interesting space which we can keep our eyes on and see where that could potentially lead to changing some of the ways that we have been doing things in South Africa.
Awesome. No, thanks for that. And we just need everybody to open their minds to the housing, to modular housing and all the new technology, printing houses and that kind of thing. That's Gareth Elston. He's a managing director of Golden Section Capital, and he will also be at the Reside conference. So last but not least, you got the final word there, Rob. Do you want to give us your final wrap, your thoughts, and putting our conversation together today and maybe leaving the audience with a final something that they can take away with them?
Thanks, Neil. Look, I'm still incredibly excited about our market. As much as we face these challenges, imagine if we could remove those challenges, what is possible in this market. Gareth spoke quite a lot to the fact that we haven't been able to get a successful residential listing away in South Africa. And I think it's all to do with scale. What we're seeing happening now, particularly with the establishment of SAMRA, that will also be at the Reside conference. We've got just 13 owners owning almost 100,000 affordable residential rental units. I see down the line, whether it's 3 years, 5 years, or 7 years, some kind of an aggregation happening where you can actually come to the market with scale, because that's the big thing. With a lot of track record and data and scale. So that's one of my wishes. I was obviously part of the Transcend attempt. Actually went very well and performed very well right through COVID. And I would like to see that happen, like I said, whether it's 3 years, 5 years, or 7 years. There's a lot of aggregation going on. And my second wish is for those challenges to be dealt with. That's upside for us. If we can get some of those challenges out of the way, I agree with Paul, try and source property closer to the workplace, but that's generally going to be too expensive unless it's government or parastatal property that is brought in at a reasonable price to enable us to build opportunities closer to the workplace. But I'm still very excited about this market.
Fantastic. That's Rob Wesselo, and that's Wesselo with a W, not with a V-A-I. And he's the managing director of IHS International Housing Solutions. So thank you, Rob. Thank you, Gareth, and Paul, who just had to leave in a hurry, for your valuable insights and your honesty and thought leadership. I really thought it was a great discussion today, and I look forward to this discussion continuing at the Reside conference. And yes, South Africa's residential property sector is under pressure, but it's also ripe with opportunity for those who are informed, agile, and thinking long term. To everyone who joined us live, thank you. You'll receive a follow-up email with a full replay link, key summary highlights, which you can also get the replay on the rei.co.za website. Just a reminder before you go, don't miss our webinar next week. It's live. It's Wednesday, the 18th of June. We've spoken a lot about PropTech today. So this is also a preamble to Reside. And we're talking about how AI is transforming PropTech. And it's a high-impact session featuring 4 top PropTech experts. And it really sets the stage perfectly for our Reside conference in July. You can register. There's a link below, or you can go directly to the rei.co.za website to register. And that's all. Until next time, I think it's been a fantastic discussion. Once again, thank you to Gareth and Rob and Paul for your time. It's been a really insightful conversation. And until next time, stay informed, stay connected, keep investing wisely. This is Neil Peterson from Real Estate Investor alongside Rob And Gareth, it's wonderful having you all. Signing off. Have a great afternoon, everybody. Cheerio.